Welcome to the Bank Tellers podcast, brought to you by Money 2020, where we speak to senior leaders from banks around the world. I'm Mickey Tasfaye, Content Manager for Money 2020 Europe, and in this episode, we're joined by Alan Rona from Griffin Bank. Hi, Alan. How are you doing?
Hi, I'm good. Thanks for having me.
Thank you for joining us. Well, by way of introduction, Alan, to kick things off, could you briefly introduce yourself and your bank to our listeners, and maybe share a little bit about your bank's journey, where it stands today in terms of maybe asset size or focus area, and what makes you unique in the industry?
Sure. So I'm Alan Runner, co-founder and CTO of Griffin Bank. So we're a fully licensed UK bank as of February 29th this year, which is actually a cool date. We are a B2B infrastructure bank. So we are API first, and we serve primarily regulated fintechs. So typically EMIs, PIs, client money. And we help technologically savvy fintechs build and distribute their apps. So everybody wants a savings account or a money pot or that kind of thing, and we can provide those, and we can give you like a million real bank accounts over API.
Got you. And I guess that's an interesting kind of area for a bank to be in. I know, with so many banks, a lot of the focus tends to be either on retail accounts or even just B2B accounts. Maybe you can tell us a little bit about your focus on being this kind of technological layer too.
Sure. So David is Mike Jarvis, my co-founder. We are both engineers by trade, and we're both working in Silicon Valley. And from there, there's a very clear pattern of, there's a famous VC named Marc Andreessen who says software is eating the world. And when we noticed this in 2016, it hadn't really started eating banks yet. And the other thing you see from the Silicon Valley lens is that there's a very clear layering of technology products. So for example, at the very bottom you have AWS, Amazon Web Services. And then on top of that, sometimes at the time there were things called platform as a service, which is like Heroku, which is like make it slightly easier to develop an app. And then on top of that, you'd have a retail thing. And you don't really see much of that in banks yet. But we think there's a lot of value there because the skill set to run infrastructure really well is kind of different from the skill set to market and attract, marketing and design and attracting customers. And it's very rare to see a company that does both of them well, like in any industry. So we decided we wanted to be the infrastructure layer for banks.
Got you. I mean, that's a fascinating kind of starting point. I know when that kind of software is eating the world, Viewpoint emerged, I guess it was like in the early 2010s. There was just a growing kind of unlocking of financial services through technology. But was there, for Griffin Bank in particular, was there a specific defining moment in that journey or in that kind of trajectory where you and David thought, there is a real particular opportunity that folks are not tapping into, or there are particular challenges that are still not being properly addressed?
Sure. We think there is a large amount of value in the same company both holding the bank license and being good at technology. A lot of this journey started from David's history, because he was working at an American startup called Standard Treasury, which was trying to sell modern APIs to US banks. And then too late in their journey, they realized that selling software to banks is a terrible business to be in. And then they said, well, instead of selling to banks, why don't we become a bank? But they were too late in the runway and they weren't really set up to do it. So that didn't work out, but we still really liked the idea. And it's still a good idea because even today you see a lot of software companies that don't have the license and a lot of banks that aren't good at technology. And having somebody that does both of them at the same time is stronger than some of its parts. Because there are a lot of places where banks could be using technology inside and they're just not.
And it sounds to me like, I guess, that ability to combine your engineering background with your kind of willingness to see, the kind of need pain points in financial services becomes a bit of a secret sauce. How does that background for yourself and Jarvis, especially, being engineers in trade, how does that influence and affect the way you think about innovation inside both Griffin Bank right now, but also just innovation in terms of within the banking world and where that place is supposed to be?
Yeah, I would say the number one thing that David and I ask over and over, like every day in meetings and that kind of thing, is will it scale? And that has a specific meaning in technology of, if you go from 10 customers to 1 million customers, are you able to keep the lights on? Because if you have humans doing manual processing of something, and okay, you have 10 or 100 or even 1,000 customers, like fine. But then you get to a big enough number and it's just no longer possible to have that be a manual process. And so we try to automate everything. We try to reduce the number of places where you have to like wait for a human to do something. So like any kind of like workflow involving like, okay, and then you email this spreadsheet to this other person. Like, no, find a tool that can automatically do that checkbox for you.
In terms of, I think one of the things that's been super interesting in the last couple of years, right, is of course with Gen AI, the whole concept of just automation in financial services and also just reducing manual workflows has become such a big area of focus. I guess perhaps it was the low hanging fruit as folks are kind of, and as the whole financial service ecosystem is kind of really kind of going deep into that way of thinking. Are there any specific things that help you culturally or within Griffin ensure that you're making the right decisions about what to automate versus where you need that real human input, and how that what that process looks like for making those decisions?
Sure. I say the number one thing is simplify. Financial services regulations are very complex and they're very vague and open to interpretation. And so you can't automate the whole thing because, first of all, there isn't even universal agreement on like what the regulation actually says. So you can't codify because even like different banks will say our interpretation of this regulation is this. And they go to the regulator and the regulator says, okay. And then a different bank takes a different interpretation and takes it to the regulator and say, we think our interpretation is this. And you say, okay, so now you have two different views of reality. And so you can't automate that, but you can take a very simplified view and say our interpretation is this, and then we're only going to handle this case and this case. And if you're this other kind of thing, then maybe you have to go to another bank, and that's fine. But yeah, simplicity is a prerequisite to automating everything.
I love that. I feel like often with new technologies, the more complex they are, actually making them work is making the problems they solve even simpler, right? It feels like a kind of counterintuitive way to think. Earlier on, Alan, you touched on something that was super interesting when you were telling us about some of the kind of early genesis of Griffin Bank, right? Which was around the challenge of selling software to banks. Now that you are a fully licensed bank and you're kind of doing that work, how are you seeing that challenge, thinking about working with partners, about whether you build, you partner, you buy in the future, and how has that influenced the way, if it has at all, you kind of think back of those early challenges you faced?
So we have an excellent engineering team. It's more than a third of the company. So then because of that, we have a strong bias towards build. And the nice thing there is that you know what you're getting, and like you have the source. Most products that we would buy, like we would never get access to the source. Like it's too expensive, or the vendor would just say no. Yeah, I would say a lot of that comes from the operational resilience requirements, or the reason that we would prefer to build comes from the operational resilience requirements, because basically the regulators say you're not allowed to have downtime. And then if you're down because a vendor is down, that's your fault anyway. You should have done a better job. So the banks are required to do so much due diligence. And it's painful for both sides because a lot of vendors are not used to selling to banks and they don't know what the process is going to be. And so the first time they get the full due diligence, they're like, oh, I don't know if this is worth it. So yeah, we prefer to build because we think it gives us a lot of flexibility. Because going back to simplicity, it's like, okay, the vendor might have these 20 features. It's like, well, yeah, but I need 8 of them, and then I need these 2 that are never going to be on their roadmap. So it might be more expensive, it might take longer, but at the end, you're probably going to get a product that is a better fit for you.
I think that probably relates really heavily to that point you made around regulation too, right? I think perhaps a little bit differently, but right now in the US with banking as a service, for instance, we're seeing some of those challenges of outsourcing some of those relationships to partners or third parties where you end up losing, you might get some of that speed to market, or you might be able to get particular ability to capture customers, but then it comes back with, the licensing issues or something else that comes together and causes more of an issue later on. But I thought that point you made around the building was interesting, not just from a position of an organizational sense, but also from, I guess, what's been happening in, your neck of the woods back in the days, right? Silicon Valley. There's a bit of a storm brewing, let's say, on X or Twitter, around, leadership in startups and in the modern kind of organizational structure around founder mode versus manager mode. I don't know if you've seen this.
I haven't.
So recently, the CEO of Airbnb, Brian, he made a talk, and he was saying that one of the biggest issues that's arisen recently, and Paul Graham of Y Combinator, he wrote a blog post about it, is that there's been a growth in management style leadership at big tech startups and tech companies, where a lot of it is focused on managing a business rather than where founders build these companies and act as founders throughout, taking a very kind of strong lead in the product development and just every core of the business. And I bring that up, I guess, to ask you around your view on leadership at a financial services company as a CTO, how you look at your role within that organization, and what your approach is. Are you more of a traditional kind of founder style, I want to build, trying to kind of get products out to market and figuring out the nitty gritty, or are you more now involved in that kind of more managerial side?
I'm definitely a founder. And I think it's important to never lose that mindset. You can, let's say, start founder mode and then you get to a successful product. If you switch purely to management mode, you're kind of like coasting, and you're going to miss the big opportunities that keep coming and maybe go out of business because of it. So for example, Netflix, started by mailing DVDs, and then that was a big change to go from mailing DVDs to streaming. Same thing with Amazon, selling books online to being hosted data centers. Amazon, the bookstore, is not a profitable business and probably never will be, but AWS prints money. And so something like 90 something percent of Amazon's returns come from AWS. And so if 2006, Jeff Bezos had just said, oh, we're just an online bookstore and we're just going to manage that forever, he wouldn't be famous today. He'd have been that weird guy that tried to sell books online, So you can never leave founder mode, or you run the risk of your company dying. And so that means you have to constantly reassess. Is this product the right thing for the market? And even if it was the right thing when you built it, that doesn't mean it's the right thing today. And so you have to be willing to adjust.
Yeah, I think that was also part of the core point too, right? With the founder mode, is where I guess you have quite a, it's like a child that you've brought into the world, so you have such a stake in. It was an interesting debate that's ignited a lot of conversation. Say, I guess for you as a founder and as a CTO of a big organization, also an organization that's not that's in a very kind of regulated industry too. What's been the best piece of advice you've received, and how it's shaped the way you think about your role and the way you think about the industry as a whole?
I'd say touching grass. Just a lot of leaders they think that they sit in the ivory tower and they make the important strategic decisions. But you need saying touch the grass means go if you had a factory, it would be go walk the factory floor. You need to go see what the line workers are doing and see for yourself where they spend their time and where the trouble is. I guess the other way I say it is get your hands dirty. You have to stay in touch with what the entire company is doing, and then also be very detail oriented. I would say a lot of the challenges we've had this year have been like, okay, we built the product this way, and then we had this unexpected customer need in an industry we weren't expecting. And like, okay, can we move the product from, can we serve that customer with this product? We're like, yeah, sure. And then there were a couple of places where we were kind of caught by surprise, and like, oh, it turns out we have to do this extra work to make that compliant in this way. So you have to like understand the entire requirements of the entire bank, like in every department at the same time. When you shift, even small things can catch you by surprise.
I guess because also, that whole operation is so interlinked. When you make one change at some point across that line, something else moves. Earlier on you touched on the point around AWS and Jeff Bezos. He's got that really famous kind of heuristic, right, around team sizes and how no team shouldn't be larger than what 2 pizzas can feed.
Mm-hmm.
Is there any kind of heuristics like that you use to kind of help you kind of keep track with your leadership, or even just with, in terms of like how within the organization you guys are delivering products or iterating on things?
Yeah. I completely agree with Bezos's rule of thumb there. I would say the other thing is that team should be able to ship on its own. So that team shouldn't have dependencies on any other teams to make something happen. And if that dependency does exist, then they consider rearranging people.
That's such an interesting way to think about it. I guess to take a step back and go back to that kind of early start of Griffin. Lots of folks nowadays want to get into fintech, get into the world of financial services. Maybe more of them are inspired by Silicon Valley than Wall Street nowadays. But I guess to those young folks, what advice would you give to someone who's aspiring to be in your position one day?
I'm not entirely sure how I got here. Hard to say. Learning to code is always valuable. And I would say, like, it's still going. I'm gonna stick my neck out and say it's still going to be valuable after ChatGPT. There's and there are kind of a couple different skills there. One is thinking logically, but the other one that's still very important, especially for founders, and even if you're not coding, is breaking a big messy problem down into solvable steps. And you can still see that today, like with even something simple, like, well, not simple, but like calendar invites. Like, okay, if you and I, if we schedule a meeting for 9 a.m., 3 months from now, and it crosses daylight savings time, what should happen? It's like identifying those little edge cases and those quirks. What's going to happen there? What should happen? And having that mindset all of the time is very useful.
Yeah, I love that. I think, I'm so fortunate, working at Money 2020, getting to meet so many folks across the industry. And I'm always just surprised at how so many folks were not intending to be in fintech or in specific positions they were. But as you said, probably the overriding thing that unites a lot of these folks with like an intrinsic desire to solve problems, sometimes even where there were other ways to do something. People were so like, this must be solved, or there's such a desire. And I think that probably contributes such a huge amount, given how hard and taxing the world of leadership and entrepreneurialism is. I guess I want to do a couple of real quick rapid fire questions with you, Alan. Let's see if I can put you on the spot with one or two of these.
Sure.
Let me give you the first one. So I feel like I have an idea already, but if you weren't in banking, and I'm going to add, if you weren't in tech either, what career would you have?
Oh man, I don't know. Again, when I was graduating high school, I was thinking, doctor or lawyer or engineer. Maybe lawyer, I guess. I'm much happier as an engineer, though.
Thank God we got you. Yes. Okay, second one. Is there a regulation or policy change you believe will significantly improve or change the banking industry?
Improve. Okay, so a lot of people are talking about the push payment fraud thing in the UK. So there's a lot of controversy about that one. I don't know about improve though.
Push payment. So that's going to be a big impactful one. Let's at least say.
Mhm.
Okay, what about you? What's the first app you check in the morning?
Slack.
Slack. That is founder mode right there. If it was management mode, it would have been email. Founder mode is Slack for sure.
It'd still be Slack.
Yeah.
I don't
No.
like typing on my phone. So like you see how many notifications do I have, and like how quickly do I have to get to a keyboard?
Efficiency. That's the engineering in you. Okay, last one. What's the most frequent way you like to pay? Card, Apple Pay, cash,
Apple Pay. Yeah,
Apple
just
Pay.
contactless. But yeah, primarily Apple Pay.
It's a
I
game
like
changer.
the watch thing.
I can never get that to work. I think I'm still like trying to figure out. I only managed to get Apple Pay fully working for me like a year ago. So, but next year hopefully we'll be good with the phone pay too. Awesome. And Alan, I guess what's the one message you'd like to leave with our listeners today about what you guys are doing at Griffin Bank?
Changing the world, obviously. No, I would just say we're combining banking license and technology and serving fintechs.
It's basically the definition of fintech: technology plus financial license.
Yeah.
Awesome. Well, Alan, that was super insightful. Thank you so much for that conversation, getting to hear a bit about Griffin Bank, and also some of your background and your leadership style has been awesome. Thank you to our listeners for joining us, and we'll see you very soon.
Yeah, thank you. Thanks for having me.